going down. Good morning, everybody. Happy Thursday. It's December 19th, 2024. Great to be with you today. My name is Bob Lang, and it's time for our Daily Bites. Talk about the markets, talk about the Fed, talk about the economy, and anything that will help us get a little better handle on what to do going forward. Today being December 19th, we are now looking at around 8 trading days left through the end of 2024. We'll have today and tomorrow. We'll have 3 days next week. And of course, don't forget, or 4 days next week. Don't forget, on Tuesday, Christmas Eve, is a half trading day. So we got a full day Monday, half day Tuesday, day off Wednesday, and then Thursday, Friday, and then the following week, 2 full days. So roughly 8 trading days left until the end of the year. So it's going to be yesterday's an indication it's going to be pretty wild and woolly to the end of 2024. It's been a great year so far for everyone, including explosive options, but more on that later. So let's talk about yesterday. What happened, right? So the markets got shellacked yesterday, and a lot of people are spreading blame out, mostly in the direction of Chair Powell and the Federal Reserve. I get that. Maybe he lit the fuse that caused a lot of the wildfires to go off yesterday, rolled the boulder down the hill to cause a ginormous avalanche. It's possible. But frankly, the chairman and the committee didn't really say anything new that we didn't already know. However, the things that we already knew, we weren't really paying attention to or thinking about in terms of executing our trades and finding ideas where we can make money at, right? Oftentimes we have to be thinking with a risk manager hat. In fact, at all times we should be managing our risk. But sometimes we take our eye off the ball of what can go wrong and think about everything that's going right for the moment. I mean, a lot of people have been investing and trading in these quantum computing names that were $1 or $2 a couple months ago. Now they're like 10, 15, 20 bucks, right? So AI stocks and so forth. There's been a lot of movement here. Even look at Bitcoin, right? Bitcoin's up more than 50% since the election, actually since October, and since the election is up quite a bit as well too. So a lot of speculation going on in the markets here right now. And when you have a lot of focus in on speculative trading, you don't think about what can go wrong. And that's really where we got belted yesterday. When you throw on top of that, tomorrow is a big expiration. It's triple witching expiration for December. That's a huge options expiration, and I think what sort of snowballed the markets going down yesterday to be down close to 4%. In the Nasdaq case, it was more than that. Was the fact that there was a huge gamma trade pointing towards the bullish side, and so when that fell through, it triggered a lot of sell stops, and it just avalanched itself all the way down right through a lot of support levels in the market. So these things happen. It happened back in August. Remember when the yen carry trade thing happened? A lot of stops were hit, and the markets bounced right back up. I only point this out to you, but to tell you that nothing really fundamentally changed in the markets. Just the price action changed, right? And yesterday, the price action went down sharply, and I'm going to show you that chart right now. Look at that big move, right? But you go back to August. Look at this big move back in August too. But we bounced back, right? So we knifed through that 50-day moving average yesterday. We'll see how we negotiate around that today. We closed at 58.72 on the S&P. The 50-day moving average is at 59.22. So if we open up right here, we could be right near that 50-day moving average at the open. We're seeing a little bit of a bounce back in some names like Apple. Well, Apple's not up right now. Amazon, Tesla's back up a little bit. We see Netflix up about 12. So some of these stocks, Meta's up 10. We get some of these stocks that are on our radar screen that have been that were pounded yesterday that are making a bit of a comeback today. Volatility. So a lot of the movement yesterday in volatility was overdone, right? It went up 74%. That was a huge move up, and we're getting the VIX being pounded down here. The VIX went way up above the VIX futures, and it's coming back down. Again, nothing really structural changed in the markets. Fundamentally, nothing really changed other than the fact that interest rates went up again on the long end of the curve. The Fed cut rates yesterday on the short end of the curve, and I think the warning here is that what the Fed really wants you to understand is that they're going to take a much slower approach. And I've been talking about this for a couple of months now, that they're going to take a much slower approach. And even longer than that, I did say that the Fed will not be done cutting interest rates until 2026 at the earliest, right? They're going to take a very, very slow, methodical approach. Even yesterday, there was one Fed governor, Beth Hammack out of Cleveland, who dissented and did not want a rate cut yesterday. Wanted to hold things at neutral. So, the divide in the Fed is starting to widen here. And there were actually 3 or 4 other Fed governors, who voiced their opinion and said, look, we don't really need to cut, but they went along with the committee's advice anyway. So what does this mean going forward? It means that rate cuts are unlikely to happen. I think the earliest rate cut we may have, folks, is maybe in May, and that's only if the data tells us that it's okay for them to cut more, and that would be if the economy is slowing down a little bit. We just saw the GDP number, second revision of GDP came in at 3.1%. So the economy is strong, and third quarter, certainly 3% growth in third quarter. And then we also have a projection in GDP now of 3.1% for the fourth quarter. So second half of the year of 2024 is looking very, very robust, very strong, good jobs market, inflation coming down, good productivity, and everything moving on all cylinders for the economy. And Chairman Powell voiced that view at least 2 or 3 times yesterday in the press conference. But the one thing that he reiterated and he talked about in the last 2 times that he spoke was that inflation is sticky, and it's sticking around, and it's hanging around, and it's not making its way towards their 2% goal. And if that's the case, then they've got to keep some sort of moderately restrictive monetary policy in place until we see some of those numbers start hitting to the downside. So they're reacting and responding in real time. They really don't know where this neutral rate is. I know a lot of people are talking about this here. I talked to my colleague Chris Versace. I said yesterday, we're at a temporary neutral right now, 4.25 temporary neutral. This is where the Fed is going to be staying at for the time being, unless the numbers start to get better. Right. If they don't get better, then you will see the funds rate stay here for quite some time. Now, that's not good for the housing market, which the mortgage rates are back to 7%. So that's not going to be helpful. Jobs market is starting to loosen up, as the Fed chairman said yesterday. So we have a lot to think about, a lot to consider. We are heading into we're in the middle of a seasonally strong bullish time of year for the markets, but that hasn't held true. And certainly with small cap stocks having a great month in November, they've given a lot of that gain back already in December. It's going to take a lot of makeup, more than 45 handles up after a 200 handle loss yesterday. It's going to take a lot of makeup to get this market back on track. So we'll see what happens. So, there was some good money flows, usually often after Christmas into the end of the year. A lot of pension funds do some rebalancing. They get out of bonds, they get more into stocks. And if that's the case, then we're going to see a lot more buying in the end of the year. But that's yet to be seen. We'll talk about that going over the next couple of daily bites. But as it is, I said we had some good earnings this morning from Accenture. I have some calls on that one. That's ACN, up about $16. And I know that Darden also came with some good earnings numbers and good guidance as well too. That stock's up about $14. Let's see what else here. I want to show you the chart of the VIX. That big move yesterday, big pop up towards 27%. We're going to come right back down again. But the key here is following and staying below the 200-day moving average, which we'd been below that for about a month or so. We popped above there and came right back down at the end of November, right before Thanksgiving, and we've been staying below there. And we kissed up to it on Tuesday, and then we had that big surge on Wednesday. So the 200-day moving average is what, 1596 and 16%. So we probably look for the VIX to come back down to that area and test that area one more time before we figure out whether it's going to cruise back up again or come back down. So anyway, that's it, everyone. I want to thank everyone for spending a little bit of time with me. Just to let you know, as a reminder, if you go to the website, we have the sweepstakes on as well too, and a little pop-up is going to be up here, coming up here. If you go to the website, you'll see the sweepstakes. Get a chance to win a whole year of explosive options total access. It's $3,000 value. It's a nice prize, and prices are going up in 2025. So if you would like to get on board, you'd probably save about $300 for a whole year of the chat room of the explosive options swing trading service, which are up about 50% this year. Trading services right here, and you can compare the plan: swing trader, spread trader, and the trading chat room, which is amazing. Which we've had some great calls in here. We had some amazing calls yesterday in the chat room. In fact, you can see here some of the put trades that we had. We closed out yesterday, and you can see the QQQ. I added some more puts, but I was in these 535 QQQ puts at 370. Closed them out at $20. That was in there for everybody to see in the chat room. Sold some QQQ puts, some SPY puts. I was in there at 260. Sold those at 15. 600% winner on those SPY puts. Again, we always hold some puts. Some of them don't work. Sometimes they don't work. Today they may not work, but that's okay. We always have to have some insurance on. All right. Have a great day, everyone. I appreciate everyone spending a little time with me. Send this out to anybody you think might find this useful, helpful. And I'll see you guys all back on Monday. Have a wonderful weekend. Trade well today and tomorrow. Remember, expiration day tomorrow. If you're holding SPY calls, get rid of them today, because the SPY goes ex-dividend right on the close today. So if you have options that expiring tomorrow or even Monday, you're going to get clipped. So get rid of those SPY calls before the end of the day. All right. Thanks, everyone. I have a wonderful trading day. Good, safe weekend, and we'll talk with you next week before Christmas holiday. Have a good day. Bye. What a field day for 1,000 people in the street, singing songs and a carry inside. Mostly say hooray for our side. It's time we stop. Hey, what's that sound? Everybody look what's going now.